Hey traders, Raghee here, and this is your free video for simplerfutures.com. I'm going to take you into the weekend here with a look at what's on our radar right now. And a quick heads up, if you already were not aware, the Simpler Futures chat room has gone live. We are in the chat room every morning from 8 to about 10 a.m. and the schedule will be expanding. We're just soft launching the new chat room. We already have a number of members there, so looking forward to seeing you in the chat room. And this is a quick look at what some of the trades were from this morning, and it's a good look at what I'll be carrying into not only the weekend but also into Monday. And by the way, we will have a session on Monday for about an hour. Because I do a lot of Forex trading, the Sunday opens and even holidays in the US are still a time that I assess what's happening in the Asian session and the European and UK session, and I can prepare for the day to come. We are right now long from 49.35 from an intraday breakout. We're not looking to take this, to much more than about a 38 to 50% retracement of yesterday's crude oil sell-off. This was one of the big questions we had in the chat this morning. Rather than picking some sort of bottom here in crude, what we did in lieu of that, much more tactically and using momentum on our side, is we waited for the market to cross over a threshold that would trigger more momentum as we run through the stops and see kind of a catapult. And you can see that on the 30-minute pretty visually clearly. And that's basically at the moment what we're focused on. Now, the thing to remember is once the market's made an intraday move like this, always ask yourself, what is this in terms of the hourly price movement range of that symbol, whether it be a Forex pair, whether it be a futures contract. Always know what that is within the context of the nature of that market. In this case, the hourly price movement range for crude. If I can, depending upon the time of day, get about 25 to 30 cents of follow through in an hour on crude, and we've got that and then some here, I should be at some level of awareness that I should be taking a profit off the table. Doing anything other than that would be double mule and putting the winner that it should be, at risk. So this is how we gauge, not arbitrarily, but by the very behavior of the pair. This is how we gauge when we should be reeling this thing in, paying ourselves, and then protecting our capital. And then at that point, we're just risking unrealized profit. So speaking of risking unrealized profit, it's a great follow-up to the NK, the Nikkei futures entry that we've been in. And, it had a rough start. It's recovered quite well since the US Open. And here's the great thing. When you get a post-profit target pullback, there's a few things to remember. One, we've already paid ourselves. As this market crossed up through 19.7 and 19.8, we took a little something off the table and paid ourselves. That means moving forward, we have a smaller position size, a break-even stop, and I'm only risking house money. For some traders on a Friday, they want to go ahead and get flat before the weekend, and that's fine. For other traders, they know that unrealized profit is the wiggle they should probably use to not smother the trade and possibly take this into next week, where I would love to see follow through up into 20,000. So I'll use a break-even stop so this market has enough movement and play to basically do what it would do on any given day. Most traders smother their winners and they wonder why their stop was hit and they're taken out, and then the market moves in the direction they thought it would move in anyways. They smother. They don't look at the nature of the price or pip or tick movement of that symbol and then back off, respecting that that's just the kind of ebb and flow that we have to be ready to handle. Speaking of ebb and flow that we have to be ready to handle, let's take a look at the YM. Now this one is a 20,995. So I've shown you a couple winners here. What about one that I'm sitting in with some unrealized loss, or heat. Well, this is well within the wiggle that I've seen many times. We've taken this trade now. This will be the 4th time. It's also the smallest position we've taken in this YM fade of the 21,000 level. So the stop is at 21,125. As long as we stay below that, I know exactly what my risk is. I know exactly what the validity of this trade is, and I'm just looking for a quick move to the downside, possibly testing the 20-period simple moving average before I go ahead and reel this one in to a tighter break-even stop at 21,005. Now, I realize at some point we're going to have to, see that break. I think this is overall still a very bullish market, but this has been a very profitable and productive 3 trades, this being the 4th, that we've had prior to this. And I'll keep utilizing a strategy as long as the underlying market trend is valid and the stops are intact. I'll just keep going ahead and refiring until finally there's a miss, we move on, and that typically means there's a shift in the market trend, and I'll respond to that and then just adapt to whatever the new strategy that we should use is. This is 100-year-old Charles Dow Theory 101. Respect the market trend. Respect the larger underlying psychology that's moving a market. All right, so what else do we have? So moving now on to bonds. This is on my watch list. Still stalling up in this 154 area. Status quo, no problem. We're going to be looking to get a little, I won't say ambitious, but we're going to start to get a little bit more aggressive on what's happening with the euro and the pound pullback. So this will be something we'll talk about in the premium video, how we're situating for a very specific entry that we can take either today, Sunday, or maybe even into Monday. And I think this is going to be one of those moves that is going to be exhaustive and very productive for us going into next week, which is of course non-farm payroll. All right, so again, if you haven't checked out the schedule, here it is. We're going to be starting the full schedule as of mid-June, but right now we're doing the 8 to about 10 o'clock. Come mid-June, we'll be rolling into the open. We'll be doing the dispatch, which is some Elliott wave and different setups from David Starr. Neil Yeager is going to do the open. I'll be taking care of the hours between 8 and 9:30. We'll be going till about noon with extra sessions at 2 o'clock when FOMC events are on the calendar. And then we'll be doing a daily 2:30 session, whether that's the simpler tech with Brian and Daryl walking you through different technical issues, computer issues, software issues, or whether that be the simpler basics, Forex Q&A or futures Q&A. So I'll have a specific beginner section every week for each one of those 2 asset classes for 30 minutes or until we're out of questions. And then occasionally, if Neil or I see something pertinent, important to the close, we'll jump back in, we'll send an alert out to everybody and let you guys know we're trading the close. But for the most part, the sessions will start at 8 a.m. Eastern and run till about, noon every day. All right, those are the important trading hours for us here at Simpler Futures. Hope to see you in the chat room. Have a great weekend. I'll see you in the next update.